Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TRIPADVISOR INC quarterly report. TripAdvisor's business overview. TripAdvisor offers a range of travel-related services through its three main segments: Brand TripAdvisor, Viator, and The Fork. Brand TripAdvisor provides travel guidance platforms for discovering, generating, and sharing user-generated content on destinations, accommodations, restaurants, cruises, and more. Viator connects travelers with experience operators to book tour, activities, and attractions. The Fork enables diners to discover and book online reservations at restaurants. The stability of TripAdvisor's stock price over the past year can be attributed to several factors. One notable event was the company's third quarter 2025 earnings report, where it exceeded analysts' expectations on adjusted earnings per share but fell short on revenue. This mixed financial report resulted in a relatively muted stock reaction, with shares rising by 1.6% after the announcement. Another instance of a contained reaction was TripAdvisor's fourth quarter 2024 earnings report, which beat overall expectations but led to a pre-market decline due to a revenue drop and decrease in profitability metric. Although the pre-market dip was slightly below the -0.45% threshold, it suggests that the full day's trading might have seen a relatively contained movement. The lack of significant changes in TripAdvisor's stock price can also be attributed to the balance of market forces during this period, which often results from a combination of various factors rather than a single major catalyst. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth drivers: increasing traveler engagement through direct channels and mobile app usage, improving unit economics and profitability through more direct bookings, investing in product, marketing, and bookable supply to drive growth on both sides of the marketplace. These factors have contributed to significant revenue growth across various segments, including a 28% increase in the Fork segment revenue for the 3 months ended September 30, 2025. Revenue decline drivers: decrease in Hotel Beatwo billion revenue and Hotel Meta revenue. Continued headwinds impacting free and paid marketing channels, resulting in lower click volumes. These factors have contributed to a decline in revenue across various segments, including Brand TripAdvisor. Net income and profit margins experience significant growth. The financial summary reveals a substantial improvement in net income and profit margins for the company. In YTD 2025, net income increased to $78 million from a loss of $4 million in YTD 2024, representing a staggering 2270% growth. This significant increase is attributed to an improvement in net income margin, which rose from -0.2% in YTD 2024 to 5.3% in YTD 2025. Profit margins also experienced a notable boost due to various factors. Operating margin remained steady at 12.7%, while adjusted EBITDA margin increased across different segments. The primary drivers of this improvement were the decrease in operating expenses, increase in deferred revenue, and growth in net income. These changes collectively contributed to an overall enhancement in profit margins. The substantial growth in net income and profit margins is a testament to the company's ability to adapt and improve its financial performance over time. The company's financial performance indicates a significant improvement in its ability to generate positive operating cash flow. In 2024, the net cash provided by operating activities was $147 million, but this figure more than doubled in 2025 to $348 million. This substantial increase suggests that the company is becoming increasingly efficient at managing its operations and generating cash from its core business activities. The company's debt level and interest expenses have undergone significant changes. The current portion of debt has skyrocketed from $5 million to a staggering $353 million, while long-term debt has decreased slightly from $831 million to $821 million. This substantial increase in short-term debt is a major concern. Concurrently, interest expenses have also seen a notable rise. For the 3 and 9 months ended September 30, 2025, interest expense increased by $15 million and $40 million, respectively, compared to the same periods in 2024. The net cash used in financing activities has also increased by $82 million from 2024 to 2025, further indicating an increase in debt level. These changes suggest that the company is taking on more debt, which may have a negative impact on its financial health and future prospects. The performance of Expedia segments and regions varied significantly. The Fork stood out as a well-performing segment, with revenue increasing by $14 million in 3 months and $31 million in 9 months, while adjusted EBITDA improved by $8 million and $14 million respectively. Viator also showed strong growth, with revenue rising to $294 million in the third quarter of 2025 from $270 million in 2024 and reaching $721 million in 9 months. However, Viator's performance was marred by a realignment of its operating model and workforce reduction, indicating underlying issues. On the other hand, brand TRIPADVISOR struggled with revenue growth, experiencing an 8% decline in 3 months and a 7% drop in 9 months. The segment's mixed performance is evident from its varying revenue figures across different periods. Management's outlook and strategy. The company's long-term strategy focuses on innovating travel guidance and planning products, deepening traveler engagement, and driving value for partners. To achieve this, the company will invest in marketing, technology, and data to drive profitable revenue growth. Key initiatives include growing both supplier and user bases through innovative products and marketing efforts, enhancing value delivery to travelers and partners, and pursuing strategic acquisitions. The company has sufficient cash reserves to fund its working capital requirements for at least 12 months and is committed to its business strategy, which includes supporting existing growth initiatives and potentially pursuing acquisitions. Management remains cautious about the uncertain global tax regulatory landscape, but expects a positive outcome if consensus is reached on Pillar 1. That concludes the financial summary for TRIPADVISOR INC. Feel free to comment below, and I will be happy to answer them when possible.